In the investing community, it seems that there are three types of people. You rather own the Yield Max ETFs, you rather own SCHD, or you're boring and just own VU. And while only two of those are actually real investments when I'm talking about SCHD and VU, today I'm going to be talking about SCHD. Every time I make a video about SCHD, it gets views. So of course, I'm not going to miss out on the potential opportunity. SCHD also just paid out their dividend today, and many investors are all hyped up about the ETF. Today, SCHD makes up 10% of my dividend portfolio, but I have had some thoughts and dilemmas in my head of whether I could potentially exit out of the position and balance out my ETFs for an amazing total return over the long term. And before the video starts, I usually ask for you to subscribe, which is the case of course in this one still, but I'd like to know how much SCHD do you own in your portfolio? And with all that out of the way, roll the intro.
Hello, I like money.
Alright, to start off, we're going to do a brief overview of the SCHD ETF itself. Right now, one share of SCHD costs $71.45. They have an expense ratio of 0.06%, which is very cheap compared to other ETFs, for example, ARK. So for every $10,000 that you personally have invested in SCHD, they're basically charging you a fee of $6. That's very acceptable in my opinion, and fees are a big way that you can easily get caught up in the total returns being lost. SCHD is basically made up of 100 companies that have different qualifications that need to be met for them to be held in the SCHD ETF itself. Over the last 5 years, SCHD has been underperforming a little bit at 37%, but we of course need to look at total return as dividends are a big part of the return when it comes to investing into SCHD. Currently, SCHD has a forward dividend yield of 3.67%, and they actually just paid out yesterday, as I mentioned. Now we'll have to wait to see December's payout to see how much their dividend has increased or decreased year over year. They've had a portfolio reconstruction with investing in more lower yielding stocks, which could potentially lead to a couple of years of lower dividend payouts or lower dividend growth compared to their previous dividend growth, which we'll just get into now. For a person like me who's particularly looking for dividend growth and growth in my companies, SCHD was very appealing when I initially bought in and invested with their high dividend growth rates that they've had. They have a 3-year dividend growth rate of 11.44%, a 5-year dividend growth rate of 13.69%, and a 10-year dividend growth rate of 11.11%. These are all very stellar dividend growth rates, but I do have questions of how sustainable those will be. SCHD also offers quality dividend yield to supplement with this growth as well, which is why it's so appealing for so many investors. Now, this dividend growth has been continuous for 11 years, so there's not a crazy track history of how total returns will be. With that said, though, these returns are very quality. When we make investments, we want the total return over the long term to pretty much be in pace or outperform the S&P 500. So we're going to compare returns now when it comes to total returns because, of course, as I mentioned earlier, a big part of the total return for SCHD is the dividend itself. Over the last 1 year, SCHD has returned 7.03% when SPY's total return has been 20.38%. That's a significant underperformance from SCHD. Now, I think it's very important to keep in mind with SCHD is that they lack exposure to a lot of high growth sectors, and what's really driven a lot of growth for the S&P 500, i.e. tech, and they've had a lot of exposure to companies and industries that have been struggling this year. For example, healthcare, telecoms, consumer staples, etc., and a lot of companies that have been pretty much trading flat or a little up this year. If we take a look over the longer term, over the last 5 years though, the returns are very eerily similar. SCHD has a total return of 59.65% and SPY has a total return of 61.43%. Now I think it is important to keep in mind that SCHD has been struggling a lot as of recently, and if we did this total return maybe 6 months or a year ago, SCHD would be outperforming. A lot of this recent underperformance and a lot of these recent potentially lower dividend growth rates have scared a lot of SCHD investors and a lot of investors overall, and a lot of slander has been had on the SCHD ETF in the Discord link in the description. Expected growth rates for the SCHD dividend is also expected to be lower, with more CAGRs being around 6 to 8% compared to the 13% that we're used to. Looking at SCHD, in my opinion, it is a good ETF. So there has been some potential dilemma of potentially selling out of part of my SCHD position and buying into SPY or VU. So I've been actively having thoughts about potentially exiting out of my SCHD position, and I'm going to walk you through the two scenarios that I have kind of in my head right now, and these are kind of actively changing as well, so I could look back on this video in 5 5 years and kind of laugh or whatever, which is a big point of this channel as well, which is kind of document my investing thoughts, process, etc. I would also love to hear your guys' thoughts in the comments section as well of what I could potentially do here, but here's my holding scenario. I haven't really let time and compound interest do its thing with SCHD whatsoever. I've only held it for pretty much a year and a half at this point, so I think it would be pretty immature for me as an investor to potentially sell out and not really let compound interest and time do its work. I don't like selling actively, I want to hold my stocks ideally forever, stocks and ETFs forever, and just let compound interest do its work. So if I were to sell, I would kind of be doing myself a disservice by selling out early potentially and not letting compound interest and the dividend snowball do its work. With that said though, I have identified SCHD as a good ETF. In my portfolio at this stage, I want great companies and great ETFs, and VU and SPY are great. I view SCHD as good. With that said though, what is the right price to potentially sell out? If I were to hold, I would continue reinvesting my dividends every quarter and buy on any significant dips. When I talk about significant dips, I mean pretty much sub $68, $67 or any crazy crashes that we have. I'd love to continue to add more. I want to continue monitoring its growth rates, dividend growth rates, capital appreciation over the long term as well. And I want to hold as 10% of my portfolio weight, which is where it's at about right now. And I want to continue monitoring that, make sure it doesn't go really over or under there, continue trimming and continue adding as needed. Right now, it's pretty much just automatically kind of maintaining that. So that's my holding scenario. And now here's the potential scenario that I've been playing out in my head of what would happen if I potentially trimmed out of SCHD. To start off, I wouldn't sell it completely. I would probably still hold half of my current SCHD position. I would have to get out at a decent price in my opinion during a bull or green market, aka above $75 in my opinion. That's where I'd get a solid return, and I think I could allocate the money elsewhere. I would sell out of half of my SCHD, as I mentioned. I would dollar cost average that into SPY or VU. I'm just going to do a little bit of research on which one I think would be better for me, although it's pretty much the same thing. I would dollar cost average into that, but at the same time, if we were to potentially go into a down market, as a lot of people think we are right now, and being in a fearful, market overall, with continuous down days and all that, I could see potentially now as being a good time to start adding to that VU or SPY position. So I mean, there's a lot of thoughts and dilemmas going on in my head right now, what I could potentially do. Another thing is whether I'd go 5% and 5%, which would make up 10% of the portfolio in ETFs, or if I would go 10 and 10 and just continuously add both of them and have that make up 20% of the portfolio. I'm still having thoughts. I can honestly and truthfully say I'm not leaning one way or the other right now. I'm still completely in the middle, and I'm waiting to discuss this more. If you want to have the conversations about this with me, join the Discord link in the description. Also, make sure to comment. SCHD is definitely a good ETF and not a great ETF when you look at the companies. With that said though, I've only held it for a year or year and a half pretty much, and I haven't let compound interest and time do its work, which is ideally what I was looking for when I bought into the company. So I would be doing myself a disservice if I did sell out. At the same time though, I could potentially get into SPY or VU and get a better total return over the long term. So, I mean, these are real debates and real thoughts in my head right now that I really am kind of confused on. I would love to talk about it more with you guys, though, as I mentioned. If you made it to this part of the video, I greatly appreciate you. If you haven't already, make sure to hit that subscribe button for me and smash that like button. If you also want to go the extra mile and you want to get access to a stock market competition from October to January, I would greatly appreciate it if you become a channel member today, and I'll post any information and updates there and how to participate. Thank you for watching, and of course, do dividend stocks, not drugs. Have a good one.